Hare Krishna. Welcome to Tax YouTube channel. This is CA Rohanar Pingre, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit of bank branches. And today we are going to discuss topic restructuring, stress, and recovery. So let's dive into it. Let me allow to share my screen. Yes. So we are going to discuss today stress assets represent what? One of the most critical risk areas in bank audits. So stress begins before an account becomes an NPA and it is captured through SMA categories. SMA 0, SMA 1, SMA 2. So, what is our role? The auditor's role is not just post facto verification, but early identification of stress signals, ensuring the correct classification, that is SMA 0, 1, or 2, provisioning, and monitoring of resolution efforts. So, the RBI has placed significant emphasis on what? Early recognition of stress, time bound resolution, and transparency in restructuring. So ICA guidance note also highlights divergence in asset classification and provisioning as a key audit concern. So moving further, let's see overview of recovery and resolution framework. So banks adopt multiple strategies for stressed assets depending on viability, that is restructuring for viable borrowers, OTAs, that is one-time settlement or compromise for partial recovery, legal recovery, that is SARFAESI, DRT, and NCLT, write-off, accounting treatment only. So the key principle is maximization of recovery value and not just accounting compliance is what the main object. Moving further, loan restructuring and frameworks. So let's see loan restructuring frameworks. What are they? So under RBI's prudential framework, default triggers review period is 30 days. Okay, default triggers review period is 30 days. Resolution plan must be implemented within next 180 days. Enter creditor agreement required if multiple lenders involved there. So key restructuring tools involve extension of tenure, moratorium, reduction in interest, and conversion to equity or debt instruments. So restructuring is allowed only and only when account is viable, cash flows support repayment, and not done to avoid the NPA classification. Very important. So evergreening risk, to avoid the evergreening risk. So the restructuring is allowed only in the case of account is viable, cash flows support the repayment, and not done to avoid the NPA classification. That is main thing to understand. Let's see audit of restructuring accounts. So auditor must ensure proper approval hierarchy as per the delegation. Viability assessment report exists or not, that need to be verified. Restructuring is not used to evergreen the accounts. That is main thing. We need to see or need to verify that the restructuring is not used to evergreen the account. So asset classification generally downgraded to NPA can be upgraded only after satisfactory performance. So we need to also verify the revised repayment schedule, correct provisioning, and disclosure requirements. Moving further, let's understand one-time settlement. What is it? So OTS is a compromise between the borrower and a bank, right? So borrower pays less than the total dues and bank accepts haircut for early recovery. So used where recovery through legal means is uncertain and value erosion risk is high. So OTS must be, that is one-time settlement must be approved by a competent authority that need to be checked based on realizable value of the security and properly documented. Moving further, let's see audit of OTS cases. So key audit checks here is compare the OTS, that is one-time settlement amount versus the outstanding dues. verify the basis of haircut, ensure the independent valuation report also, and check whether borrower is willful defaulter, related party involved, and accounting will be balance written off after the settlement, income recognition only on the receipt basis. Moving further, let's see recovery proceedings. So banks initiate recovery through DRT, that is for recovery suits, Lok Adalat, that is small value settlements, NCLT, IBC, that is corporate insolvency cases, and SARFAESI Act, that is enforcement of the security. So as an auditor, we must verify the timely initiation of this status tracking and provisioning based on the recovery probability. Let's understand SARFAESI Act basic understanding. So SARFAESI allows what banks to take the possession of the secured assets, sell those assets without court approval, and key steps involved here is demand notice, that is 60 days, possession of asset, and auction or sale. So applicable only when loan is secured, outstanding more than rupees 1 lakh, an account classified as NPA. So these conditions need to be fulfilled. So let's moving further, let's see audit under SARFAESI Act. So let's see, auditor should check what here: proper service of notice, fair valuation of the assets, transparent auction process, and no related party purchase. Or we need also to verify correct adjustment of the sale proceeds and balance recovery status. Moving further, let's see write-off and settlements. So write-off means here removal from the books, but recovery efforts continued even though we write off from the books. So types are technical write-off, that is branch level removal, and prudential write-off is that is full removal. So important is here that write-off is not equal to waiver. We can still go for the recovery. Compromise settlement is similar to OTS but may involve negotiated recovery. Moving further, let's understand audit of write-offs. So auditor must ensure that 100% provisioning before the write-off, approval by whom? Competent authority, and proper documentation is taken care of. So, and red flag here is write-off used to hide NPAs, no recovery follow-up. So that need to be checked. Moving further, audit issues in stressed assets. Common audit issues include here is evergreening of the loans. That is the main thing which happens many times, most of the times. So incorrect SMA, NPA classification can be a part of it. Delayed recognition of stress, improper restructuring to avoid what downgrade, and inadequate provisioning. So ICA has also highlighted the divergence in classification of advances as a key concern area. Let's see early warning signals, that is EWS. RBI framework emphasizes what early detection of the fraud and stress through EWS and red flags accounts. So auditor must identify warning signals, report to the management, and ensure timely action. We need to be taken care of these red flags. So moving further, let's understand role of the concurrent auditor under this. So concurrent auditor plays a preventive role, detects detects what stress early, report the deviations, and ensures the compliance with the RBI norms. So LFAR reporting is mandatory and forms an important internal control tool. Moving further, we are now at the conclusion for the today's discussion. So stressed assets are not just a compliance issues, but what a financial stability concern. So as an auditor, we must look beyond the documentation, focus on economic substance, and insurance what the transparency. A strong audit approach ensures what better recovery, reduce the NPAs, and improve the banking discipline. So that's it for today. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, or you can also comment below the video. So if you have not yet subscribed Tax Guru YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on the Tax Guru YouTube channel. Thank you so much. Stay tuned to the Tax Guru YouTube channel. Bye bye. Take care. See you soon. Hare Krishna.